Jack in the Facebook group, she asked the question, and I reckon, a lot of people might be thinking this, a lot might not be, but how do you know you are in a good financial position to invest in a second investment property? Today on the podcast, I've got John Pidgeon and Rach Kroon from This Is Property podcast. I don't know, I'll throw to both of you. How do we know?
Yeah, look, ladies first.
Well, I think you would know, in my personal opinion, if you have, I guess if you're in a position to do it. So if you've got both the equity and the income to buy another investment property, but also if you've got the mindset to, if you want to be buying another property, that's generally when you sit down and do the scenarios, maybe with your mortgage broker and your accountant of how that would look. And I think that gives you a little bit more knowledge to go, am I ready to do this? I think that would start the process, kick it off, to start to think about if you're ready. What do you think, John?
Yeah, look, Jack's floating the idea, and you're right, mindset, big one, is like, I'm ready. But financially, it's maybe a little bit of an unknown. So, yeah, I think what's your own life doing? Cash flow management. What am I saving? Have I got emergency buffers? All the rocks and the foundations that we talk about. But then what's my first investment property doing? What are the holding costs for that? Because I think, and without digressing too much, like we go down a capital growth strategy and borrow the maximum that the banks will allow us, and all of a sudden we've got two highly negatively geared properties and we're potentially left out to sea in the event if we haven't got our foundations in order. So, yeah, finance, cash flow in order as well as mindset. In my mind, you're good to go.
And that's why I like to see those scenarios done. So when you get those scenarios done of how it's actually going to look and what it's going to cost you, and let's say it was, let's just pick a figure, let's say it was $150 a week to hold that property. Let's have a look at that. Have you been saving $150 a week? Have you been putting that into your, home loan as additional repayments? Is that going to change your lifestyle? Because I think once you've got all those figures in front of you, it makes it a lot easier to have an informed conversation.
Yeah, and I think, to be honest, the fact that they're asking the question probably means they are in a good financial position to buy a second investment property. Because if you had your home, you had your first investment property, and you were living week on week, and you maybe had a personal loan or something else, and you just couldn't get on top, maybe you didn't have an emergency fund, well, the answer's probably no. But I like to run people through our Sound Financial House, and we always have to be looking at this stuff. So I would ask Jack, have you got a cash buffer? Have you got your insurances in place? Is your estate planning sorted? So all these things. But I think at the end of the day, you then need to, and this may be for John, there's the difference in financial position needed for $1 million investment property and a $600,000 investment property as well.
Absolutely there is. Like the difference, we did a scenario a couple of days ago, the difference is about $1,500 a month of holding costs.
The odds that you have to carry.
From a $500K purchase to $1 million purchase. Like, okay, you can have the million, but you're going to have to facilitate a higher holding cost for for that short term anyway.
Yeah, so when John says holding costs, that's literally what you have to cash flow.
Yes, when you've already taken into account your
rents received, interest payment.
Yeah, and all the running costs.
There's a difference.
There's a difference, yeah. And obviously there's variances of that, using equity as a deposit versus cash, principal and interest versus interest only, etc. But it's just, it doesn't always work out to be double when you double the price, but it's a starting point.
I reckon as well, when we talk about property, I would say it's a big commitment to pull the trigger on your very first property, your first investment property, or your second or third investment property. So you don't want to casually walk into this. Like, it has to be thought about. And I would encourage Jack and anyone listening, even if you wanted to buy your first investment property, what is your life looking like right now, and is it what you want it to be in 2 or 3 years? And the question is, well, no, it's not, because I want to study again or retrain or do something, or we want to tweak the house or renovate the house. So I think we have to bring in those other lifestyle goals and factors in, because we don't want the quote-unquote financial blessing of being a property investor to turn into a horror story because, we bought that and then we now literally can't afford any type of luxuries in our life.
And just as you said that, we had a client a little while ago that was looking at buying their second investment property, and when asked the questions about what was coming up in the next few years, one of those things was upsizing their owner-occupied. Now, that sort of came out in the conversation.
Yeah.
Now, when we actually reverse engineered that and looked at upsizing their owner-occupied, if they bought this second investment property, well, they actually may not have been able to do that. So you don't want to do something here because you're ready if it's going to impact
Be at the expense of living your life.
something that you want to do in the next 2 to 3 years, because it's not a 1 year goal. Like, you're holding property, you want to be able to hold it for a period of time.
Yeah. So in summary, do you reckon between the three of us, we could do a quick 10-point checklist?
Yeah.
So I'm going to cheat and go first. At all times, we want to make sure there's no consumer debt. So we'll carve out the car loan because, that's another thing. We want to make sure you've got your life insurances, your income insurances in place. We want to make sure wills and estate planning is sorted. And, you can walk and chew gum at the same time. You can go, yeah, we're going to get this happening and, review our estate plan. We probably want to make sure that we've got our emergency fund. John, with our emergency fund, if I'm Glen, I'm in personal finance cap on, we might say, look, you really want 3 months worth of expenses as a cash buffer in your life. With your property clients, do you ever say you want an additional cash buffer per property, or do you just assume that a 3 months general emergency fund?
Yeah, so first of all, distinguishing that the 3 months emergency fund is for your personal life, not your property portfolio.
Yeah, okay.
The second part is, like the example before, the $1,500 per month versus $3,000 per month holding costs. I've got to allow for that right now in either my future earnings or in my savings buffer for my property. Let's call it a property buffer, or in some way, shape or form equity, right? We might draw down on some of that. So we've got to have that for the next 12 months. We've got to forecast and say, right, this property is going to cost me $20,000 to hold for the year. I can't wake up in 3 months and say, oh, all my money's gone. I've got nothing to hold the property for, because the bank's going to come screaming. So, yeah, the 3 month doesn't apply in property. It's got to be, what's it costing me before tax, before I do my tax return. That's why it's so important to understand that before I buy the property.
Yeah.
So there could be an extra $5,000 extra cash buffer for that property.
Or I'm factoring into my next paycheck to say I'm going to carve off $600 of my next paycheck and every other paycheck after that for this particular property.
Right, okay.
Yeah.
Rach, anything you want to add in terms of this checklist that we got side
Yeah,
railed
so
on?
I would say whatever that cost to hold of the property is going to be, and you might have done some figures on this. If you haven't, maybe even well in advance, sit down with your broker and work out those numbers before you consider it further. But whatever it is, let's see if on top of your buffer you can put that amount comfortably into your, your offset account over the next period of time to see how that feels for you. Like, go without those funds first and see if it's comfortable. It's a lot easier to go after 4 months, you know what, that actually wasn't comfortable for us, rather than buy a property and then have to sell it.
Just on that, Rach, and in maybe defence of the broker and or a buyer's agent, is sometimes the mortgage broker might not know what the running costs of a property are. Like, they'll know, okay, there's rates and insurance and whatever else, and the interest rate, and these are the loan repayments. But until we get down and dirty with the actual strategy in terms of location and type of property, we don't know what the actual rent's going to be.
Yeah.
So it's not until not the 11th hour, but before we start the search, we need to know the answer. But when you're having the initial chats with the broker, you might not know what the exact will be. So there's a bit of give and take on that one.
I think as well, you really want to make sure in terms of your financial position before you pull the trigger that you've got the ownership structure sorted. So have a look at last year's tax return, have a look what this year's going to be. If there's a spouse or partner, is it going to be 80-20? Is it going to be 50-50? Is it going to be 100 in either name as well? So we'll do tax structure. We want to make sure that there's no other big lifestyle rocks.
what are your goals, short and long term, and really sit down and work that out to make sure that this isn't going to impact them.
And this is where it gets to the point where it's like, do whatever you want with your money. But if you were in this position where you had your house and your first investment property, and you always wanted to go to Europe for 3 months and it could cost 30 grand, and you had that 30 grand, I'm probably doing that first. Because you'll be fine. You've got an investment property you set up, you're good at saving. So, I just think you will know if you're in a good financial position. And one hard line to say you're not is if you go to a broker and they say, we can't get you any money.
Yeah.
That's probably a
It's a
telltale
flag.
sign. Mindset's obviously a part of that as well.
Yeah.
Getting your head around it. Are you not everyone that listens to the podcast, surprisingly enough, Rachel, is into property, which is strange. But in any case, we'll run with that. The other part of this question for Jack is not only do we know we're in a good financial position for an investment property, but some of us are in a great position but also don't realise it. So some of us go searching for, can we borrow money? I want to buy another property, the property nerds. But there's a whole heap out there that don't realise that they're sitting on a gold mine.
Yeah, 100%. Well, this episode is brought to you by Sphere Home Loans. Sphere, Rachel is one of the directors and the director of Sphere Home Loans, so thank you, Rach, for supporting the podcast. But Sphere Home Loans, they help a lot of our listeners all over Australia. Reach out to them, spherehomeloans.com.au, if you want to see if you can afford a second property. If you want to see if you can afford your first property, reach out to Sphere Home Loans. Why go direct to a bank or lender when you can go to one place and get a smorgasbord, I haven't used that word or heard it for about 80 years, a smorgasbord of choice. So thank you to Sphere Home Loans for supporting the podcast. Let's do this. You're listening to Money, 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 or as the regulars like to call us, M3. Everything discussed on the podcast is general advice only, which I'm licensed to give, and details can be found in the show notes. My name's Glen James, former financial advisor, now podcaster. I host this show and a show called Retire Right. I've also got a book called The Quick Start Guide to Investing, which you can check out wherever good books are sold, or there's a link in the show notes. Otherwise, thanks so much for listening today. Now on with the show. Now, a bit of housekeeping and announcements. We now, if you haven't listened to the podcast, This Is Business, I would encourage you or implore you to go and check out This Is Business if you want to get encouraged with your small business, with your side hustle, or you're thinking about starting a business. We do that podcast. There's myself, Kayla, and we've got a new host, Adrian. Lots of good stuff there. The reason I mentioned that is I interviewed Gina on This Is Business, and she's got a fulfillment business. So long story short, I said, let's use you. All that to say, we are now selling our books on our website, because a lot of people will say, oh, where's the best place to buy a book from you so you guys can benefit the most? Where we used to just send them to Amazon or whatnot. But now you can buy books direct on our website. So I'll put a link in the show notes.
Great.
You'll pay, and then Gina will fulfill that for us. So I don't have to be stuffing boxes or envelopes. And then we've got some limited edition merch. We've got some Money, Money, Money t-shirts and tote bags as well. And there's literally limited number of them. Like, I think there's 12 t-shirts.
I don't believe I have a t-shirt.
It looks like there's 10 now.
Yeah, well, you can grab some on the way out. But there's a link in the show notes to that. Now, Dylan has a question. It's a big one. We might get Rach to read this because she's learned.
Okay. Hi, everyone. I'd like some advice on balancing my trade support loan, investing and saving for a house. My situation, age 22, 2 years into my electrical apprenticeship, 2 years left. Income, $1,300 a week after tax. Savings, $50,000 total, including a $20,000 emergency fund. Debt, $14,000 trade support loan so far, but I'm eligible for up to another $10,000 before I finish. Works like HEX help index to CPI repayments through tax. 20% will be written off if I complete my trade. Investments, EFTs, IVV, VGS, NDQ, growth tilted 3 ETF plan. Weekly crypto, DCA $25 into BTC ETH. Contributions, planning to DCA $1,000 a month into ETFs. Goal, save for a house deposit in 4 years. That's a lot of information.
It is.
My question, since I already have a $20,000 emergency fund and low living costs at home, I was thinking about investing most of the $14,000 trade support loan portion and the extra $10,000 I still receive, instead of keeping it in savings, since repayments will come out of tax automatically. In your opinion, should I invest the TSL money into ETFs for growth, put some or all of it into First Home Super Saver Scheme for tax benefits, or keep it in cash given my 4-year house timeline? Curious what others in a similar position have done. Thanks heaps.
Well, Dylan, thanks for listening to the show at age 22. I'm sure, given that you are already dialed in to your own money and personal financial situation at age 22, and you've got 20K in emergency savings and you're already investing, there's no reason why you won't be very financially successful. Electrical apprenticeship, 2 years left, awesome. You'll be really good financially. John, do you want any comments just zooming out? Like, what would you say?
Yeah, he's dialed in all right, isn't he? I definitely wasn't that at 22, Rachel. I think it really depends on his risk profile in terms of, well, am I going to take that 20K of emergency funds and do something with it and commit to something that has an element of risk involved in it? Some might say yes at 22, look, I'll find that again over the journey. Some might say, well, no, I'm not prepared to do that. I won't be able to sleep at night knowing that I've got nothing left in the emergency fund. So the political line would be no, keep it there and just...
Well, I don't think it's so much the emergency fund. I think it's the
trade loan.
The trade loan, the 14K.
Okay, let's start again.
Yeah.
So,
no, we won't.
Yeah. So keep your emergency fund where it is, Dylan. Go and do what you want with the 14. All right, next question. Look, you've got a home in 4 years as your number one target. That's his number one goal. So I think you're young enough to be able to go and take some sort of risk leading up to that phase. But I think you want to control the controllables and say, how much do I need potentially in 4 years? I don't know if we've done that exercise. What sort of price do I need to pay in today's dollars on a home in 4 years, depending on where I live? What deposit does that mean? And am I on track to do that according to my monthly savings and my investments? So, look, I'd say go for your life. Where we're actually putting it, I think the First Home Super Saver Scheme is good, but it'd probably be closer towards that 4-year time frame of getting the deposit. So it probably means the first one, knowing that you're already doing that. What do you think, Rach?
If you're living at home with your parents and your goal is to save a deposit in the next 4 years, which is awesome, now you're a second-year apprentice, so your income's going to spike. So next year it goes
He's on
up.
almost $100,000.
Yeah, but by year 4
Already.
it's going to go up, and then he'll go up again when he's a tradesman. The only thing I could think about is I believe you're definitely going to hit your goal of saving for a deposit in 4 years. But the First Home Super Saver Scheme is for owner-occupied. If you're living at home, you're 22, there's a really good chance your first home won't be for owner-occupied purposes. So just before I started doing that, I'd really think about what that goal is, because I think saving outside of that, you'll be able to reach that goal as well, if that makes sense.
So I would probably say a couple of things here. Savings around 50K, 20K emergency fund. We'll carve out the 20K emergency fund. Now, I was thinking about investing most of the 14K. So if we go, that's 34K. So there's obviously, 16K of actual savings? Am I doing my maths right? because he says he's got total savings of 50 at the very top.
He's got 30,000
Take 20,
saved.
30, yeah.
He says savings total 50, including 20K emergency fund, which is 30.
Yeah.
However, I was thinking about investing most of the 14K trade support and the extra 10K I'd still receive. So I think he's drawn the 14K trade
that's
support.
part of the savings.
Yes.
I get you now.
And then he's still got access to 10K that he can withdraw. For those who aren't aware, the trade support loan, they're now called an Australian Apprenticeship Support Loan, and you can borrow $25,983, which is paid in monthly instalments, but it just basically slips in like a HEX and HELP loan. So once you earn over that $56,000, it will get garnished off your pay. However, if you complete the apprenticeship, you get a 20% discount. So what I want to say to Dylan is piss off that loan, get rid of it, put that money back onto that loan. You're living at home, you got cash, you got a really good income. You don't bloody need a trade support loan. Like, it's just ridiculous. Just because you can doesn't mean you should. Don't try and game the system, because in a couple of years when you want to go to get a mortgage, guess what? They're going to use that effectively help debt as part of the servicing.
What sort of interest are we paying on that?
Well, it's just the same as HEX or HELP. So it's the CPI wage price index.
If they wipe off the 20% though, is it free money?
Yeah.
It is, and this is where we really need to get into it. You just carry more risk borrowing to invest.
But it sounds like he's up for it. Like if he can get 6 or 7%, yeah. I mean, it's not going to change his life.
No, and this is the problem. Not the problem. This is good, and we're just bantering, Dylan. You got every friggin' ETF. Not really. You got 3 ETFs. You got Bitcoin. You're looking to do DCA. You're looking to do First Home Super Saver Scheme. Can we pick one thing and friggin' smash it? Like,
yeah, well,
that's what I'm saying.
I think the savings amount, like sometimes we can cut out some things in our life and save the equivalent of what we might be earning on an investment anyway.
My whole thing is the guy clearly wants a property at some point.
Yeah.
I'm pissing off the trade support loan, paying that back, not redrawing it. You've got a good $1,000 a month that you can save. In 6 months, it's going to be another $6,000. In 12 months, mate, if you can only save $1,000 a month into ETFs, and you're living at home, earning $1,300 a week after tax, where's the money going? It's either going on a friggin' Ranger that you got a loan for that you're not telling us about. It's going up the wall at the friggin'
Equipment, trade materials.
Sure. So what I'm probably saying is, if you want to buy a home, go and buy an investment property today and get happening, then sell the bastard in 4 years and buy a home to live in. But
he hasn't got the funds today.
Yeah. And he's only just gone on that income. Just in Dylan's defence, if he's only gone second year apprentice, he's only just got that money and he's already got all that saved, that $50,000 saved. I'd say that money's going towards his savings. You got to think his first year apprenticeship would have been a lot lower.
Yeah, but I'm just saying now, going forward,
and
because he doesn't have. Let's keep the emergency fund away, which means saving. 30 grand left. If we put 14 of that back into the trade support, he's only got $16,000 cash on top of the 20 grand.
Yeah, I agree. Get rid of the trade support.
We don't need this.
Sure, the government. Go with it?
No.
Yeah, because okay. All right. Well, look, all roads lead to Rome. Do what you want to do, Dylan. I think, like at 22, as you said at the start, we're dialed in. We're doing everything we can, and in some cases, we want to do more, but we physically can't.
Yeah.
So don't overcomplicate it.
Yeah, and just consider that First Home Super Saver Scheme is for owner-occupied property. If I had a 22-year-old son living at home, second-year apprentice, I'd want him to buy a couple of investments while he was under my roof.
Yeah. So he's saying. I just took that as going to buy my own home. He's saving for a house. I just took that as his home to live in. But, yeah, absolutely, you've got flexibility. And the old rent vesting strategy or free vesting until he's 30 living at home is a good one if He's allowed.
Sorry,
Now-
Dylan's mum.
Sorry about that.
With the, there has been some chatter, and there are some lenders that are not including the help debt, which would cover the Australian Apprentice Support Loan, if you had under 20,000 for servicing. That's new.
Under 20,000, or if there's less than 1 year to go.
Right.
Regardless of the amount. See, some people on a big income, they're actually going to naturally pay it off in the next 12 months, even if it's over 20. And there's lenders that are ignoring that.
Turning a blind eye.
So in summary, Dylan, you're crushing it, but I want you to
Crushing it.
get more focused. I want you to pick one big rock and go after it. And I reckon he could be in an investment property sooner than what he thinks
Yes.
if he wanted to go down the property road.
Yeah, and further to what I was saying before, get that figure in your head to say, right, I'm buying in at 500 grand. I need 10% plus stamps. I need 75 grand. Reverse engineer that. How much per month do I need to save for the next 4 years to get my
And the
result?
20K emergency fund, I don't know. Like that's
Go and use it.
that's a lot of an emergency fund.
Well, it is when you're living at home.
Yeah. So that's, it's 1,300 a week after tax. That's 20 weeks.
Yeah.
That's almost half a year. I want you to work out, Dylan, what does it cost you to wake up of a morning, your rent or board, phone bill, travel costs, entertainment, all that stuff. I reckon the 20K could probably go down to 10 or 15 in his situation. But to round this out, my question, since I already have a 20K emergency fund and a low cost of living at home, I was thinking about investing most of the 14K trade support portion. No, we're not. Put it back. Naughty boy. Instead of keeping it in savings, piss it off. And then don't draw on the extra 10 grand.
Can your parents do a parental guarantee loan, and can you buy a property now?
I honestly, with that income, if you can get a parental guarantee, he could have an
He could
investment
buy-
property next Thursday.
Imagine the equity he could build in 4 years. That's a
Yeah.
great place for that cash to go.
Yeah.
Can we get a PG with interest only?
Yeah.
Yes, we can.
Yes. So that's the other kicker of it.
And an apprentice can borrow?
Yes.
Yes. Cool.
Yeah, many do.
Rock and roll.
Especially on that kind of income.
Yeah. So look, you're crushing it, Dylan, but you're spending too much if you're only saving around 1,100 a month. TB perfectly H. We'll be right back after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at sky.com.au. That's skye.com.au. And they'll point you in the right direction.
All right. I got a bit fired up with Dylan back there.
Poor Dylan.
No, I love it. I'm just, I haven't recorded in a little bit, and just because you can borrow money from, this is a dumb thing, right? They've set these loans up where it's an interest-free loan to help you purchase trade tools and supplies while being an apprentice. Like another government website says, this is a loan used for living expenses while you're an apprentice. So they've set it up so you can buy tools, but it's literally, you can get this trade support loan, $24,000, and go to Europe.
Yeah.
And it's just a loan. And
ETFs.
we just don't all buy
Don't.
ETFs.
Go
Oh.
crazy.
Because you can just cash flow them in an orderly fashion, let's just keep away from the government system and, sure, they might waive 20%. Yeah, $4,000, it's free money, but at what cost? what if you put all that trade support money into Bitcoin or some altcoin or something and it has a bath?
There'd be people out there doing that,
Yeah.
for sure.
And I'd be
As
personally
they drive their
tempted.
new Ford Ranger.
That's right. So, Dylan, you need to reply. Actually, during this episode, when we go through this community section, I'm going to find the post on Facebook and ask him, do you own a car? If so, what car? And do you have a dent on it? Because I think there is more to that story, my friends.
I will put my money on no car, no debt.
Because
I
he's
think
so dialed
I think
in.
he's
Yeah,
too dialed in
yeah.
for that.
The money's going somewhere. That's the problem.
You're such a criticizer.
No, I'm just a realist, John. I like to think I live in reality.
Yeah. No, I'm on Dylan's side.
So am I.
Clean.
But I want Dylan to
Clean,
just
Glenn. Let him go.
go, Dylan. Do what you want. Get that trade support loan and just go smash some crypto. All right. We asked everyone in the Facebook group, what do you value most in life?
And
Above-
use the emergency fund, by the
Yeah,
way.
friggin' leverage up, baby. Let's take some risks.
We're 22.
Let's go for it. Have a good punt. Friggin' take $1,000 down to the pokies and go for it. Do
tap.
what you want.
Tap.
What do you value most in life above everything else? Not what you think you should say, what's really true for you. So, do you guys want to start reading that while I reply to this?
Yeah, Toya says freedom. Hope she hasn't been in jail. Rachel, you were going to say, Olivia, time.
Yeah. This is where I throw to both of you
Working in
to
a job
do
with
this
forced
one.
overtime. I don't want the double time. I just want to go home and spend the way I want to.
Tim says, making sure my stuff doesn't own me. I like the fact that my stuff is affordable and I could buy 5 of something and not be financially worse off. Most of the other things are mentioned in other comments.
GC, health, a capable body, a quiet mind, silence, and rich food.
Jenny says, autonomy.
Alicia says family and health.
Natalie says, peace. Clean house, quiet life. Probably shouldn't have 3 kids.
Amen, Natalie. Jessica, the kids feeling happy and safe. I just want them to grow up without trauma. Yes.
And Paul says, before kids, getting ahead. After kids, getting home. Family and health, I would have said money before I had a family.
What do you value most in life, Johnson?
It's got to be time. I'm with Olivia. I think, yeah.
Yeah.
It's, pretty high priority for me. What about you?
I don't know. Nothing.
There's probably 3 or 4 really. It's got to be your health,
I have to say health.
but time can't be replaced.
Yeah, but your health dictates how much time you have.
Yeah, I know, but you can get health back. You can't get time back.
Well, you can't get your health back if it's a degenerative disease.
Yeah. In a lot of cases.
Okay. One reason why I didn't ever want to move away from where I'm living in this area is and it's probably because I'm, lonely and go home by myself every day and that. But I've
It's a
got
wonder someone hasn't slid into your DM and
Yeah,
asked you
I'm
for
gonna
a
run
date.
This Is Dating.
Hey, plenty have.
Because you've put enough feelers out there.
Well, I'm just a realist, John.
I think if there's anyone out there that feels that they're a good fit, or even if you don't feel they're a good fit, hit Glenn up.
Someone once. Someone. No. We'll move on.
No, let's go.
Come on,
Someone once was messaged one of my team members asking about me. And she's like, look, this is not appropriate for me to be telling anything about Glenn's life to a stranger. However, he said, flick him a text. No, I value my friends.
Yeah.
So my friends, you've met Maddie, Tim, Jai, friggin' Dirty Mike.
Dirty Mike.
You've met Herbie, Frank, everyone at Eddie, at my parties. We're in this unique position where we've been friends since our late teens, and a heap of us still live in the same area and regularly catch up.
Yeah, it's great.
And Chriso and Beth, I just really value my friends. I mean, that would probably change if I spawn and populate the earth, but Anyway, thanks for that, everyone. Ali Ray. All right, I'm going to read this. Hey, everyone, with your questions in the Facebook group, if you're going to put them through ChatGPT, tell it to consolidate it more, because there's telltale signs when people use ChatGPT. The M dashes, the way they do it, the emoticons, all that stuff. Not that I care, but it's just these are long questions. Thinking about downsizing. Would love your thoughts. A couple of years ago, I bought a big, beautiful house. I was happy working and maintaining that lifestyle, but now I'm in a different season of life. Do you like my dramatic effect? Yeah. Potentially transitioning away from full-time work, maybe permanently, maybe just a break. And it's got me rethinking everything, especially my living situation.
You should be a primary school teacher reading a story to
I've owned that.
6-year-olds.
This is the worst podcast episode that we've ever done, and I'm sorry, everyone. I've owned the house for just under 2 years. Purchase price, $730. Closing costs and all that crap, $775. $35K in interest and another $10K in miscellaneous costs. So my total investment is roughly $810. I think the current market value is somewhere between $850 and $900. So I've probably broken even or made a modest gain, factoring in selling costs. Emotionally, I love this house. It's been my sanctuary. And I've genuinely enjoyed living here. But realistically, it's a bit much just for me, both in terms of space and upkeep, gardening, cleaning, general maintenance. I also feel too emotionally attached to rent it out. I think we've got to sell the bastard, Ali. Next question. Nah. I worry tenants wouldn't look after it with the same care. And rental yields in this area aren't amazing anyway. So here's where I'm at. I'm considering selling and downsizing to a 1 to 2 bedroom apartment, say 5 to 650. That would still give me a home base and some property exposure, but with far less maintenance and stress. It might also free up some equity and mental space so I can focus more on travel, health, and generally enjoying life. I could even rent out a room if I wanted to. And if I leave for a few months, it feels a lot less, it's better to have an empty apartment than an empty house, blah, blah, blah. In the same time, is this short-sighted to sell now, only after 2 years? Should I just keep the house, accept the cost of upkeep as a vacancy as part of the ownership and ride out the wave of prices continuing to go up? Curious to hear what others have done in this situation. Would love your perspectives, especially if you face the love the house but life is shifting kind of decision. Look, Ali, you have our permission to do that. It's okay to do that. What do you guys think?
You don't have my permission.
Oh.
I think you got to keep it. Like, it comes back to the priorities in one's life, right? And if financial wealth is something that Ali appreciates, don't know if it is, it's current market somewhere between $850 and $900. So let's say worst case $850. Purchase price has been $730 in 2 years. $120K is not the real cost, but the buy versus value cost, right?
Can I just jump in there, John? When Ali said $35K in interest, you can't really use that as part of this.
Correct.
Because you're paying for accommodation wherever you are on this planet if you're renting or got a mortgage. So
that's And one of the points to my story is the $35K in interest. Right? Yeah, who would have thought?
Who would have thought it?
So I'm thinking this is not a bad asset. Yeah. Now I get that. Okay, I move out. I can't stomach someone living in it. All that. Like there's no right or wrong. It depends on your personality and respect to that. But can we find another way? We haven't spoken about potentially getting a gardener in that can do some general maintenance for once a month. Is that okay? Like, are we going to regret? We haven't made any money conceptually when we sell this, or very little. And are we going to regret going and buying a 1 to 2 bedroom apartment that's most would say an inferior asset, and look back in 5 years' time and say, why the hell did I do that? I could have sucked up the gardening or the maintenance or whatever it might be. So just a little bit of a thought for you to ponder, Ali, before you go rushing into selling it. We might wake up and potentially regret it.
Rage.
And I can see why you may be hesitant, especially the emotional attachment having lived in a property. And you also noted that rental yields aren't good in the area. So I can see why you may not want to rent it out. I would want to do the scenarios both ways of selling this and buying that apartment, or selling this, buying another asset that you're not emotionally attached to, that's an investment, and renting an apartment. I just want to see the scenarios done both ways, because I think if you're going to a good asset to a maybe not as good an asset, is that a great financial move? And I just want to see the scenarios done both ways. If you were talking to whoever does your finances, just say, could you work this out for me? How does it look if I bought and downsized, and how would it look if I sold and then went and bought another asset and rented?
Yeah, Ali's probably a really good candidate for a clarity call. Actually, you know what? Guys? I think I did I don't 100% know or remember. I'm just thinking because the name there, I may have done a what would Glen do with this person a couple of years ago, and I don't think we ended up putting it to air because she wasn't comfortable with it. So she might, I don't know. I just think, and while you guys were talking, I was writing down, there's something here, you're scared about something. What is it?
Yeah, some fear somewhere.
Is there a pain point that isn't this situation here? Because, in medicine and health, they call it referred pain.
Yes.
So, my neck's sore. Yeah, you idiot, because your hips are out of joint or something like that, whatever. Is there something that is not in sync in her life that we want to throw this out with the bathwater? And the only reason I'm just piss the bastard off and sell it, and it is different because when I rented at Merriweather Heights, that big ass house.
Yeah, it was big.
It was literally, I was the same thing. It's this is just ridiculous. I don't need a 3-bedroom house with 2 backyards and double car, 2 living rooms, and the lawns and the maintenance was huge. And the lady that lived next door since 21 or whatever, she's like, oh yeah, Tracy and Bob, they were in the garden every day. And I'm like, oh, yeah, well, that's not me. I'm sorry. I'm getting someone in once a month and they're doing a crap job, but I don't care because I don't want to pay $5,000 a year or $100 a week to have someone come around.
But think about that. Case in point, you didn't own that.
That's right.
And that blue chip suburb, great asset, land, big house, that's got dollars written all over it in 10 years' time. Yeah. And this could be the same. That's my concern
So,
for
Ali, I want you to actually reach out and book a clarity call with John. What do you charge? $450 or something now? $500?
$450.
$450. Spend an hour with John. I then want you to go back to your mortgage broker or reach out to Sphere and just get some scenarios, because at all times in my big therapy sessions, we've discovered and everyone's got this, there's emotional Glen and logical Glen.
Yes.
And, 80% of the time, logical Glen rules the roost in my life, maybe 90%.
That's good.
And there's been some times where logical Glen has to get the F out of the way so emotional Glen can breathe and assess. Maybe emotional Ali is 90% of the time and logical Ali only pops up every 10% of the time. So what I want you to do, Ali, is get some data on the table financially, and then, because you've only been there 2 years, and I know it's your home, but in your mindset, if you did move out and keep it as a property, she might not have the money to buy an apartment, and we don't want to borrow against this to buy an apartment to live in. Can we rent for a couple of years and just see without selling this asset? And then we have to change our mindset to it's no longer a home of mine, it's just a house. And then it's the tenant selection. You can really choose your tenants and do all that. But I just think it's a great dance between emotions and financials.
And what is it that you don't like about your job? If you're wanting to drop down to part-time, maybe take a break, is it actually the job that's causing some angst?
That's true. Yeah. So lots going on there. I love it. It's good. But I just don't want you to, like, I am a fan of selling the bastard and, we tried that, didn't work, get an apartment. But we don't want to turn around in 5 years and say, crap, I wasn't in a great headspace.
Yeah.
I shouldn't have done that. So maybe we need to slow down and go, okay, I'm not making any decisions until February, because I've done that with my motor car situation.
Yeah, and this has that written all over it. Don't know, Ellie, but it's like I've got an investment property, the hot water system blew up and the tenants moved out on me. I've got these short-term issues. Can I resolve them? No, I'll just sell it.
Yeah. Final question, and it's a quickie. Nikki, super splitting. I'm wanting to split, Johnson behave, I'm wanting to split 85% of my super contributions with my husband each year going forward until we have a similar balance. Thanks for all the info, Glenn. You're welcome. Yeah, so her husband has a lower super balance. She's got the higher one. And you can put 85% of your super into your spouse's super account each year. I'm with Host Plus. He's with ART. Host Plus have told me that I can only transfer if we share the same super company. Has everyone found this to be the case across all companies? Frustrating if one of us has to change. Thanks. Just as part of Host Plus product, they just don't allow you to transfer split out for whatever reason.
I didn't know that.
No.
Most other funds will allow you to. So if you had if she was with ART and he was with Host Plus, you could transfer a split out from ART to Host Plus. So the only way around it is potentially set up another Host Plus account in his name with a small balance and just roll it over, bit of admin there, and then, roll that out to his ART, bit of admin, or move his fund. I don't think we need to move funds for this if we're all happy with his setup, but effectively, yeah. They may change that. It could change next week, but at the moment their product doesn't allow external spouse splitting.
And is that the minority?
Yes.
Okay.
Yeah, very much so.
But the concept of it's good.
The concept's awesome. 100%. And I'll always say it, I think it's the best kept super secret for couples, particularly if one's taking extended leave for family upbringing and all that, or if you want to get the other account a bit higher.
Yeah, it's a max out both.
It's really good. So there we have it. We will leave it there. Thanks for the chat, friends. We'll have to have you guys back soon. Until then, if you want to join us in the Facebook group, remember to put that you heard us on episode 831. And also, because there's just a lot of spam, oh my gosh, Dylan just recommented.
I need to know what Dylan said. I bet he doesn't have a car loan.
I said, hey, Dylan, further to the above, do you have a car or a car loan? If yes, what are the details? Absolutely not.
Yeah, Dylan.
Trying to live the life
So
you and people like Ramsey
Yeah, so,
preach.
yeah. So,
Oh, wait.
So
No.
critical.
No.
Poor Dylan.
Dylan, absolutely not. Trying to live the life you and people like Ramsey preach, which is debt-free. Well, don't borrow money on Hex or Help to invest.
No, he was thinking that 20% back. He's going
He's
free
getting
money.
He's going free money.
Yeah,
I know.
And use your emergency buffers.
But I just want to know
Proud of you, Dylan.
where's your money going? Unless there's more, there's got to be more money that he's maybe saving, because I'm just seeing, I'm planning to DCA $1,000 a month into ETFs. I'm seeing $250 a week into crypto. Maybe he's also got other savings.
See if you can line up an appointment for me and Dylan's parents.
Yes.
Mum's
Please.
gouging him with rent.
Yeah, go mum. Dylan, have a meeting with Rach and
Your parents.
Your parents. Let's get this roll on the show.
Yeah.
Dylan, he's going to be crushing it. I'm not critical against Dylan. You think I am, don't you, John?
Sounds like you are.
Yeah, this auto switcher is annoying me today. But my name is Glen James. You were
John Pidgeon.
And
Rach Kroon.
you can listen to these guys on This Is Property. They've also got a This Is Property YouTube. We'll leave that there.
We have.
All right. Bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds Financial Services Licence 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.